Hello, everyone, and welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy. Using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way to exit highly appreciated assets tax deferred so you can create, preserve, and grow your wealth. I'm your co-host, Pearson York, filling in for Brett Swarts. And each episode, I'm joined by some of the best wealth, business, leadership, and real estate individuals in the world to share ideas, deal stories, and inspiration so together we can make complex tax deferral strategy simple and passive income plans achievable. We're also streaming on expertcresecrets.com and the Capital Gains Tax Solutions YouTube channel. So be sure to rate, review, subscribe, and hit that thumbs up bell if you guys get value out of this. It really helps us out. We really appreciate it. So thank you so much for doing that. I'm super excited about our next guest. He has been just saving people on taxes since the 1980s. He is extremely knowledgeable, and we are going to get a ton of value out of him. We're going to get all his secrets right now. So you heard it first. Julio Gonzalez. How you doing, man?
Hey, great. Thanks for having me on. And yeah, let's get to deferring taxes and preserving wealth.
Yeah, absolutely. Awesome. So Julio, how did you get started in your field?
Yeah, so in the 1980s, like you were saying, I started in the tax industry, gravitated to real estate, realized over 20 years that we were doing so much for real estate tax for our Fortune 500 companies. And I just figured at that time I'd start my own company and try to be a resource to the accounting community and help all their real estate clients be tax optimized as well.
Okay, so it really just born out of you saw a need and you were just good at it. And at that point, you just wanted your clients to have the same value.
Well, back in the 80s, the IRS basically said, not only do you have to be accomplished in tax, but you have to be a licensed engineer to conduct some of these tax studies for clients. And so, there were a few of us back in the 80s that were both. And ultimately, I just knew that CPA firms under the Big Four would never have an in-house engineering department that could help the clients with all these tax benefits. So I said, listen, if you need that resource, I'm here for you. And that's how we got started.
Awesome. Okay, tell me one or two of your strengths that you have that have led you to be successful.
I think, I say this all the time, just hard work. I mean, nothing beats hard work. So just working as hard as I can, getting up at 5 a.m, working all the time, because I say as an entrepreneur, you give up vacations, you give up weekends, you give up evenings. It really becomes your life. And then, it takes a company, and that means you have a great culture for your employees and a great place for people to come work with and have great opportunity. And so I think those two are vital. I think we do a great job of that here.
Awesome. So hard work and building a culture around your company that instills those values that you have.
I think those are vital in today's world.
Yeah, absolutely. Okay, cool. All right, so let's get into the meat of this thing. Engineer tax services. So I have a hunch on what it is that you do, but what is your guys' bread and butter? What's the number one secret to just killing it in the real estate game and then saving a bunch of money on taxes?
Yeah, I mean, we really started in 2001 with cost segregation, right? So cost segregation, like the best thing about real estate in this country is the IRS says that if you buy real estate, you get to expense it. So it is a tax benefit from the beginning, right? We get to write it off typically over 27 to 40 years. But the IRS allows an engineer to come in and break the building into components. So now that we're not writing off a building, we're writing off mechanical systems, electrical systems, plumbing systems. And that once that's done, typically we can get up to 50% of that building, that purchase, expensed immediately. And so that preserves so much wealth, right? Because we create all these deductions, and then those deductions offset income and preserve the capital wealth, the capital gain wealth. And ultimately we're allowed to do invest in more buildings. And that's how we see the billionaires in this country, right? They buy real estate and they know how to defer tax and they know how to minimize tax to create their wealth.
Yeah, absolutely. So you guys focus on the cost seg studies, and you've been doing it since the 80s. Have you guys expanded since then into other forms of tax deferral.
Yeah, I mean, no doubt about it. Like in 2006, the IRS passed this energy tax efficient bill. So now, since 2006, and now it's a permanent part of our tax code, we reward building owners for making buildings, energy efficient. So we come in as licensed engineers, we measure the energy efficiency, whether it's a retrofit or whether it's new build. And ultimately, if it does pass those energy benefits, it can be up to $5 a square foot in tax benefit for those clients. On multifamily, it actually is a credit up to $5,000. So tax deduction on commercial buildings, $5,000 credit on multifamily. So those are big incentives, right? The government says we want to keep buildings healthy, we want to keep them energy friendly. And so we have those tax incentives, and that's a big one for us as well, is making sure that most people are making their buildings energy efficient just to keep their costs down. But to know that they get that reward, they get a better return on investment in the energy efficiency with these tax benefits, that's tremendous. That's one of the big ones. Certainly we have research and development design. So when we're building buildings with innovation, right, we're building to a new code, to new fire issues, to new hurricane issues. That design work that's innovative is also refundable as research and development tax credits. So, that's a big opportunity too. We see all these new buildings, homes, residential, commercial, being designed to all these new standards, higher standards, energy standards, structure standards, and all these things obviously create a tax credit for those buildings as well.
Awesome. So when you guys are more really niched down in the actual like tax credits that you have to be an engineer for. Is that really kind of the niche, or do you guys expand past that as well?
No, we do. I mean, listen, when we do a cost segregation report, we help also utilize that report to abate and lower property taxes. When we're done with measurements on the roof, we can send those roof drawings to AT&T, Verizon, T-Mobile, Sprint to see if that roof will qualify for 5G antenna income and rental income. I'd say that's the next generation income, right, is renting out those rooftops. And also we'll measure those buildings too from the rooftop and from the land space to see if they have solar, other high wind, or other alternative energy tax credits available to them based on their spacing and design of the building. So we do those as well. And ultimately, we can use all these collective efforts to lower, create TIFs, which are sales tax abatement. And obviously, we have historic tax credits, right? So we do the historic tax credits when we're buying buildings and the government is giving us incentives to really bring a building back to life and to give it the old charm. And right, so those can be up to 30% federal and matching on the state side. We do new market tax credits, which is really credits to go into communities where they need low affordable housing income as well, or affordable housing. So that's an area too. But also, like, it's just not these credits that are massive in real estate, right? I mean, a lot of these credits can be your equity stack, right, in a property. That a lot of people, get investors, but to know that there's this credits available that can create that capital stack. Also, tremendous grants at the federal and state level. So there's so many grants available to new construction or renovations for certain purposes. Maybe they want to see high-tech buildings for that city, right? They want that business activity, or they want affordable housing, or they want kind of different buildings for that community. So they bring in revenue. So there's all grants associated. Every state has a grant associated with it. Now, this grants can be as big as the credits. And literally, when you pair the grants with the credits, you can get up to 60 to 70% of that equity really free from the government, right? But because why? They want that activity. And obviously that helps on the capital gains side, right? Because you're not facing all those capital gains as well.
With those grants, do they lower your cost basis?
100%. So in a way that you can count for it, lowering your basis, right? And ultimately, look, you guys, like you said, you have the deferral trust. Those are brilliant as well. You have 1031 options to you. When you sell the next building, you can do a cost seg and get all those write-offs to offset the capital gains. But obviously these grants are forgivable, most of them. So great for, avoiding or minimizing capital gains as well.
Interesting. Okay, you mentioned 1031. So, what has been your biggest frustration with the capital gains tax deferral and the 1031 as a tax like whisperer over there?
Well, I think that every time they are changing the tax code, which seems to be every year now, right? So we've seen 6 different tax code changes in the last 4 years, right? So every time the federal government, Senate, and Congress get together and want to change the tax code, 1031 is always on the chopping blocks, right? So they're always like, well, we got to get rid of 1031s, and so you never know. We can never depend on what our tax code is in the real estate industry. Sometimes they want to remove the interest deductions that we are afforded for borrowing on the real estate. So I think the frustration is, what tax code are we going to have, and how's that going to benefit the real estate? And then some administrations, they want to cut the 1031s. They want to cut, capital gains. They want to raise those rates, right? You see that, right? So,
yeah,
we just don't know from year to year. So we just have to be nimble. We have to stay on top of this and ultimately be ready for change.
Yeah, absolutely. Julio, what city are you located
in? Today, Palm Beach, Florida. We have offices all across the country where we work with several thousand accounting firms and their real estate clients in every state.
So how do you know like the intricacies of each city and like the credits that do you guys just find a market that you're going into and where you have a bunch of clients and you go in there and then you just like learn the city stuff? Is there a lot of overlap between cities? How do you guys know about all these credits, I guess?
Yeah, our grant division, has been in place for over 20 years. And we have a big research department. So you have to imagine that grants from city to states change all the time.
Yeah.
They're always having special elections. So we, and I'll send this out to you, but we have a massive grant library. And so when clients come up, or CPA firms, we work with CPA firms in almost every city across the country. Those grant tables are changing all the time, but we just got to keep up with it because it's so vital. And cities change all the time. Like, we talked to a few cities in Delaware. They're like, we'll give you the land and we'll give you these grants if you come build multifamily housing for us. Great opportunity, great for developers that have an expertise in that. But no one even knows how to go bid on this because, you got to go deal with the government and no one's looking at that, right? But this is free equity. And after 5 years, all this is forgiven. But it's just like, you got to know where to look, right? It's like, even with anything we do, like if we went to college, there's a lot of places to get grants. No one really understands that whole process. But this is what governments, they tell you what they want and where they want it, right? We need these buildings so badly. There's so many towns across the country that are trying to promote and bring in building and development, even with the opportunity zones that became popular, right, on the federal side. Right. But a lot of states will say, hey, listen, beyond the opportunity zone, we'll give you that land, right? So that's part of your equity. And we'll put you in touch with favorable debt, right? That will issue bonds or things of that nature.
Yeah, and that's another question that I have. So I'm sure you're familiar with it, but in California, we have the Melrose tax, right?
Yeah.
Which is the special assessment tax. And for those of you that don't know, in California, there's a Prop 13, and it's basically a property tax cap, that 1%. And the Melrose is basically the city's way to issue bonds so that they can develop infrastructure. And then they add it to your property taxes if you live in a certain district. So, is that similar like across different cities? It's just called something different. And is that the kind of bonds and stuff that you're actually referring to? So like, Lennar building a massive, complex right now, right? Developing I'm in Southern California, right? In the little city of Tustin.
Yeah.
So they have a really big Melrose and they're building all this infrastructure and all that kind of stuff. Is that what you're talking about? The tapping into those types of bonds and stuff like that, and then afterwards they're forgiven?
California is really a microsystem of the whole economy in the United States worldwide. Certainly California wants certain activity and other states want other activities, right? And so, yeah, but very similar. And some are even more comprehensible, more forgivable, more money associated with it. So, California is certainly one state that has that program, but there's other states, obviously, with less population looking to bring in more people. And certainly you'll see much bigger grant opportunities in those states.
How does somebody actually go about getting these? Do they just contact you? What's the process look like?
Yeah, I mean, basically, the real estate companies come to us and say, these are the type of projects we're looking to do. These are the locations. And then we'll just come up with the grants, the credits, and the tax incentives involved from a federal, state, and local, and show them a benefit analysis to see, if it makes sense for them, right? We do that at no charge. And then ultimately they decide if that's, based on those benefits, if it's a good place to go forward with.
So you guys work on a contingency, basically, like if you don't close the deal, there's no upfront costs or anything like that.
Yep, that's right.
Okay. So let's say that you're a commercial broker and you're like interested in putting together packages of, potential sweeten your deal, right? Like for example, I have 2 properties right now in California that would be really good for like redevelopment. Repurpose the buildings from retail to maybe some office and live work and maybe some retail and that kind of thing. Are there grants out there for that? And can like a broker reach out to you and be like, Julio, like here's the deals. Are there any sort of incentives the cities or the states or anything are offering for them to? And then when we go to put into our offering memorandum, we have your contact information, right? And hey, we have these, X, Y, and Z grants available for this to kind of sweeten the deal. Contact Julio to find out how to do that.
I think every broker should do that. Like we have close relationships with some of the brokers at Marcus Millichap, CBRE, and they won't do a memorandum for a property without checking with us first to see what opportunities are involved. And I think that's how they're more successful than, maybe other brokers that aren't putting that piece together, because this is free equity, right? This is things that help get the deals done. And I mean, listen, we know some brokers that literally they call on us. We're happy to do it at no cost, put that in there for them. And ultimately, hopefully it's good for the economy. It's good for the people that are going into the property, good for the broker, good for all of us.
Yeah, absolutely. Okay. Do you guys do stuff on the sales side? So like after you sell the property or during the sales property, do they come to you and say, hey, like, or how does these grants kind of affect the sales side?
Yeah. So good point. I mean, we always do a sales allocation tax report. So say we have a client and they're getting ready to sell and they had the building, they've used depreciation, cost segregation, energy, they've had some grants or whatever it is, or maybe they hadn't any of that stuff, but we do a sales allocation tax analysis so that we can make sure that we set up the sale of the property in the right way to be most tax efficient, right? Because think about this, we write off some of that depreciation through the cost segregation studies, and you think a lot of times we're captured, but really a lot of those assets are retired, they're abandoned, they're exhausted. Now, we don't have to pay recapture on those types of assets, but no one identifies them prior to the sale. So, doing those analysis, coming up with the sales allocation sale so that we can optimize that and then look at other ways to like sell that building, right? Through the trust, maybe through a 1031 program. Maybe we do the cost seg on the other side. Maybe there's other ways to do it, charity, right? That we can do those as well. And those, going through that process before you sell can be tremendous savings.
Yeah, absolutely. And for those of you who don't know what Julio's talking about when he keeps kind of bringing up the trust, there's thousands of trusts out there that will do a whole bunch of different things. But one in particular that I think he keeps referring to is what's called as the Deferred Sales Trust. It's one of our cornerstone strategies that we use over here at Capital Gains Tax Solutions. And really what it is it's a tax savings vehicle that's an alternative to a 1031 exchange. It's like-kind agnostic. It's doesn't have the time constraints. It doesn't have the same asset type that it works for more than just commercial real estate or investment property. It works for a business. It works for stock. It works for, crypto, primary home. So it can work for a variety of different assets. We're actually looking at doing a deal right now with a racehorse. So go figure.
Oh, interesting.
Yeah. So it has the ability to really help out in a lot of different highly appreciated assets, not just real estate. And some of the challenges with the 1031 that we kind of already talked about is you never really know, if they're going to put that one on the chopping block, but also you have time constraints, you have like kind constraints, right? You have all these different kind of like things that confine you to, you got to find a new property really quickly. You got 45 days or so to identify, 135 after that to close. And it's just one of those things that's, can kind of put you in a bad position. So we use the Deferred Sales Trust. It gives you liquidity, diversification. So if you want to learn more about that, we have a mastermind every Friday at 10 a.m. Pacific, 1 p.m. Eastern. You can come to capitalgainstaxsolutions.com. Register for that. We have a ton of content, kind of videos. We do a ton of these podcasts and stuff like that with, just super high quality people like Julio over here. And we're going to absolutely be adding that service into our OMs
I'd love to send some clients your way that are selling like their businesses. And I think this is one strategy. We don't have like what you sell the business, you don't get the 1031 strategies or anything like that. But I'd love to have them talk to you about that.
Yeah, that would be great. We can chat a little bit more about that offline. But
Sure.
I want to be respectful of your time here. So Julio, where can people find you?
Yeah, so engineeredtaxservices.com. That's our website. And then Julio-Gonzalez tax on LinkedIn. And listen, I put up daily tips every day on real estate, how to preserve your wealth. Again, we're not the CPA, we're not the accountant. We work with your CPA and your accountant as the licensed engineer to help qualify you for all these tax benefits. So, and again, we'll do the benefit analysis at no cost to see if it makes sense for you and your accounting firm to take advantage of some of these strategies.
Yeah, absolutely. Absolutely. It's absolutely brilliant. So go check that out, engineeredtaxservices.com. And I think this is a really big point that needs to be kind of hammered home, is that like a lot of people might think that like, oh, you're trying to steal clients and stuff like that. And what you said was, kind of really resonates with us, is because we're not here to steal clients. We're here to like come alongside and add value in a specific kind of like niche,
Yeah.
You guys do engineered tax services and find grants and credits that I can bet with probably 99% certainty that most CPAs in California have no idea about Georgia tax credits.
No idea.
They just don't. And, unless they have their own building there, right, which is possible. That's why I said 99%, right? But at the same time, like, most of them don't know about this. And there's a lot of investors who invest in, out of state and all that kind of stuff, and their CPAs at home. So don't feel like we're here to, trying to uproot anybody, circumvent anybody, or we're here to come alongside you guys and enhance your team and provide value in ways that you never have, and work with you guys. So I love that point, because it's so big, it's so huge that it's a team thing.
I want to add to that point that your accountant can't do it all. He needs the consulting partners, right? No accountant that's not the Big Four is not going to need those consultants. And listen, make sure your accounting firms do have those consultants, or bring us into your accounting firms, because it's vital. It's vital for the accountant, because ultimately, if he's not bringing in consultants like us, he's going to lose the client. That's the simple answer, right? And helping the accountants be more consultative, helping you guys together, that's where the magic happens. This is where the free equity comes in. This is where we preserve that wealth in the beginning, at the end. And I think those things are vital. So it takes a team, like you just said, to make sure that we're optimizing tax. Not everyone can do all of these things, right? And I would even argue that the Big Four doesn't do a great job of it. But having people like us in as the partners to the accounting firms, your accounting team, that's where we start to see the magic.
Yeah, and just even if they do try, right, and you stay with them, how much money do you leave on the table, right? How much value do you leave on the table, because you don't bring in people like Julio who have who are niche down and who provide an excellent service and literally give you free equity. Like, that is so sweet. There's absolutely zero reason not to reach out. So make sure you go to engineeredtaxservices.com. Check that out if you have any sort of buildings or anything like that in other markets and whatnot. And just figure out, if there's anything that you can get some free equity. So there's the 2 cents. Okay, Julio, are you ready to get into the lightning round?
Let's do it.
Okay. What is your favorite book?
Well, I think Friends and Family, one of the Carnegie special books that, has always just kind of, for me, been the base foundation for business.
Yeah, When Friends and Influence People.
Love that book.
Yeah, it's fantastic. What's your favorite leadership quote?
My favorite leisure quote?
Leadership quote.
Oh, leadership quote. Well, again, and I see this all the time, but my most famous quote is that it takes 100% sweat to be successful.
Yeah, absolutely. What are you most curious about right now?
Well, we are working with tax credits now in the metaverse and with crypto and with blockchain, and how, we're accounting for tax in the metaverse and what we're doing with the buildings in the metaverse. And it's kind of a new puzzle for us, and putting the puzzle together, blockchain, the buildings, and the title that comes with it. It's really kind of exciting here. And we're seeing it in South Florida, where people are tokenizing their buildings and creating shares that, with the REITs you can buy, but you can't sell. And then you go into partnerships, it gets a little difficult. But if this tokenization really works, it could be an exciting thing for the industry.
Yeah, absolutely. And well, that's a whole nother separate podcast about how this whole thing works in the metaverse and all that kind of stuff. But that's for another day. So Julio, thank you so much for coming on, guys. engineeredtaxservices.com. Connect with Julio there, or connect with him on LinkedIn, Julio-Gonzalez-Tax. Make sure to check that out. Don't forget about our mastermind. Go to capitalgainstaxsolutions.com. Every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Come there, learn, bring your CPAs, bring your people, ask questions. It's a great spot for you to come and just learn, meet us, and all that kind of stuff. So make sure to go check that out, capitalgainstaxsolutions.com. Julio, any parting words?
Well, again, I'm grateful to be on. I'm grateful that you create a venue for people to learn more, and through that learning and that education is where they can preserve some wealth. And that's how a lot of us come from, modest backgrounds to accumulate capital. And so I'm grateful to you for that.
Yeah, absolutely. And thank you so much for coming on. And thanks again, everybody, for listening to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and their professional teams struggle to find great capital gains tax deferral options. Not having a clear plan is the enemy. Using proven tax deferral strategies, such as the ones we discussed today with Julio, Deferred Sales Trust, 1031 exchange, charitable remainder trust. All of those, right, are the best way to create, preserve, and grow your wealth. So please rate, review, subscribe. Thank you so much. Hit that thumbs up button and that bell for so you don't miss any more of this amazing content. Thank you so much, Julio. Thanks again, man, and we'll see you on the next one.
My pleasure.